Are you dreaming of purchasing a home in Lancaster, Pennsylvania, but not quite sure where to start? In this video, I'll help you understand everything from the average prices of homes, how to calculate your budget, and the different down payment options. Now, whether you're a first-time home buyer or looking to upgrade, this guide will take you through each step carefully. Now, for those of you who don't know me, my name is Albert, and I am a realtor in the Lancaster and York, Pennsylvania area. So how much do homes in Lancaster cost? Well, there's kind of a couple of different sections or different areas of Lancaster. Firstly, we've got downtown Lancaster, and the average home price in this area is about $280,000. If you're in the north part of the city, it's going to be more expensive than being south. If you're going further out into the suburbs like Mannheim Township, you're probably looking at a price range of near $350,000 to $450,000 per home. Going out as far as Lidditz, you're going to be looking for some of the larger homes at around $400,000. Now, let's break down the cost of budgeting to purchase that home. We're going to use the average house price of $350,000, so let's just break down each step carefully. If we assume a 7% interest rate over 30 years, our mortgage is going to be $2,100 per month. Taxes in Pennsylvania are pretty high anyway, so we're looking at around about $400 to $500 a month. Home insurance, I'm going to put in $125. If a home has an HOA, this could be anywhere from like $8 a month all the way up to $200 or $300. Or even more if you have one of the condos downtown. So HOA, let's just say it's about $100 a month just to have all bases covered. This is going to give us a total estimated monthly payment of $2,625. Now, a good rule of thumb is not to have more than 28 to 30% of your total income go towards your housing costs. That includes your mortgage, taxes, insurance, etc. So in this case, you're going to want to have a household monthly income of $104,000 per year. This is actually slightly higher than the median household income for the area, which is around about $75,000. If you take the maximum amount of debt that you're allowed, for example, on an FHA loan, you can have up to 43% of your total income versus debts, be it 43%. So that's known as your debt to income ratio. Your income would only have to be $71,000 a year. So in order to afford the average $350,000 home, you're going to have a household income of around $70,000 minimum, but ideally an income of $104,000 total. Now for down payment options, there are a few that we have here. Depending on your income, you may be able to qualify for a 0% down option. There are programs in Pennsylvania called PHFA, which is a federal housing program that helps subsidize first-time home buyers. You can get into a home for as little as $1,000 down, including all your closing costs. However, this program isn't always the most popular with sellers because it can be slower and there are a lot more hoops that you have to jump through. It also suggests that you may not have a lot of money to put into a home in the first place, which makes you a riskier buyer. There are a couple of different loan programs that enable you to put 0% down as well. One of them is called the 80-20. I've done quite a few with them this year. And basically they do two separate loans. One is 80%, one is 20%. You're borrowing a total of 100% financing on the property, which means your down payment is technically zero, so you're only paying for those closing costs. Typically on a home of this price, your closing costs alone are going to be around $15,000 to $20,000. So that's still quite a big chunk of change. The benefit of this loan is that it's conventional, and because it's split into two separate loans, you wouldn't have to pay mortgage insurance, which could end up saving you hundreds of dollars a month. Another common option is the 3% down conventional option. On this price of home, you're going to be paying down $10,500 plus your closing costs. So you're looking at around $25,000 to $30,000 all in. This is a good option if you have a strong credit rating, as you need to have a credit score of above 620, whereas FHA loans will enable you to be a little bit lower at 580. The benefits of a conventional loan are the appraisal is slightly more lenient. So if there are a couple of small things that might need fixing that you can do yourself, you don't have to get the seller to do them before you purchase the home, which means you're going to be more attractive to that seller. Moving on down the list, we have the 3.5% down FHA loan. This one is for people with a credit score of 580 or above. It tends to have a slightly lower interest rate versus the conventional ones unless you're putting more money down. And this is because it's subsidized by the federal government, able to give you that lower rate. They are going to add on something called MIP. So this is like private mortgage insurance. However, this stays on for the lifetime of the loan. So you'd either have to refinance onto a different loan type, or you'd have to move house to get rid of it. This is like the private mortgage insurance where you basically pay a monthly fee, and it can be somewhere from between $50 up to a couple of $100. And the lower your credit score is, the higher that fee, that MIP fee is going to be. You're going to have about $25,000 to $32,000 in total in order to close, depending on taxes and time of year. But this can be a great option for people with lower credit scores or who have a slightly higher debt to income ratio. Finally, we have the big jump up to the 20% conventional down. So requiring a lot more money down at 20% is going to be $70,000 for your down payment, plus another 15 to 20 for those closing costs. So you're probably going to be all in for just shy of $100,000. The good news is this means your monthly payment is actually going to be considerably less because you're borrowing a lot less money. And typically your interest rate will be lower than some of those other options where you're only putting 3% or 0% down. You also won't have to pay that mortgage insurance. That means you're going to be saving $50 to $100, maybe $200 a month for the entirety of the loan. Now I'm going to go through a couple of different options of what you can expect to purchase in this price range. Being slightly further out of town, we have 502 Oak Grove in Lancaster. This is a cute little rancher on the west side of Lancaster. We've got vinyl planking for flooring, 2 bathrooms, 3 bedrooms, 1,550 square feet. This is a pretty typical home that you could expect to purchase for this price range. One of the huge pluses, you do get a lot more space. The second property is in the heart of downtown Lancaster. We're slightly in the northwest section near Franklin and Marshall College. And this property, 535 North Mary Street in Lancaster, I love these red brick colonial properties. There's just something about them. And if you look at the detailing there at the top in that window arch, you can find some really cool homes. Looks relatively fresh. We've got some new vinyl planking through there. Now, the benefits of this type of property is you are literally 5 to 10 minutes walk from downtown. There's loads of really nice restaurants. There's also the Fulton Theatre. So if you do like watching musicals or plays, you're only a walk from a real thriving central hub. Finally, heading a little bit further out there towards the east, we have 183 Samuel Road. This was actually sold a couple of weeks ago. So right on the market, a really good indicator of what homes are selling for. This is a split level home, 4 bedrooms, 2 bathrooms, lots and lots of space. Finally, a few tips on budgeting and saving. I really advise you sit down, maybe speak to your parents or with your partner and really make that budget. Look at your income, look at your debt. If you have a lower credit score, speak with a lender and see what advice they can give you on how to get that score up. If you have a property in mind, they'll be able to give you a pretty close number as to how much the overall closing costs are going to be, including your deposit. And that's a number that you could use for your savings goal. If you already have pretty decent savings, maybe you want to stretch that budget a little bit further, you can pay down some of your existing debt. Now, again, speak to the lender. They'll be able to advise you to which debts are best to pay off. Finally, protect your credit score with your life. The difference of 30 to 40 points can make a massive impact over the 30 years of a loan. If your credit score is not quite where you want it to be, speak with a credit expert, work on paying off some of those higher interest rate debts like credit cards, and build your score up. If you found this video useful and are looking to take the next steps, don't forget to subscribe for more information on how to move to Lancaster. If you're ready to find that dream home, reach out. I'd love to help.